Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris, in which we take a closer look at some of the most interesting news items in the mining space. Joining me again today is Dr. Nicole Adshead-Bell, founder and principal at Cupel Advisory, and who also sits on the boards of several different companies. Nicole, welcome back to Kitco.
Hi, Paul. Thanks for having me. It's definitely been an action-packed week news-wise in the mining sector.
Absolutely. But before we get into that, please note, Digging Deep is not investment advice, and the opinions expressed, and there's many of them here today, I believe, these are our own and not Kitco's. Now, as you alluded to, Nicole, what a week. This week has been deal week, and not just any deals. The big news this week, and possibly the biggest news of not only the year, but potentially the decade, depending upon how it finally plays out, is that Anglo American confirmed it received, and I quote, an undisclosed, non-binding and highly conditional combination proposal from BHP, which Anglo's board promptly rejected. Anglo's market cap was 36.5 billion as of Wednesday's close, so a very big deal potentially there. The two companies have a complementary portfolio of products, including copper, nickel, steelmaking coal and iron ore. BHP is keen to grow its copper business in particular. Doing a deal with Anglo would make it the undisputed red metal champion with about 2.5 million tonnes per year of production. Nicole, what did you make of this announcement?
I think it was opportunistic, but also very smart in some ways. I think BHP starting to grasp the significance of what will happen in copper over the coming months and years. And I probably haven't made any secret of the fact that I've drunk the Kool-Aid on copper. I think the incentive price of copper has to go up to between $6 and $8 to result in meaningful new production. And the easiest way to grow your business isn't to build it, is to acquire it. And so it makes a lot of sense. Obviously, the deal was very conditional, and Anglo American shareholders rightly said no. But Anglo American is now in play. We saw a number of transactions where the initial offer over the past couple of years, whether it's Newmont acquiring Newcrest, and obviously when BHP first made the offer to Oz Minerals, there was an initial no, but those companies essentially became into play. So then what does this say? Does this incentivize Rio Tinto, Glencore, the other large majors to also start rubbing their pencils and hands together to be able to acquire? Because what generally happens, we see in our sector, is there seems to be groupthink like behavior. And when one company does something, you tend to see boards and management teams of like-sized companies go, oh, that's a good idea, we should do that. Or if XYZ is doing that, we need to be considering it. So I think above and beyond just what's going to happen in the larger companies in the copper sector, it has a lot of interesting implications to what happens further down the food chain. We see an opening up of extensive M&A in our sector, and I think we will, particularly focused on copper.
Excellent. And one other big deal last year's biggest deal even was started in the same way, and that was with Teck and Glencore.
Absolutely.
Groupthink isn't just something that affects the mining sector. You see it very much in the journalism, the periodistic sector as well. And the way this was reported very much evidences that, with the exception, I might add, of an op-ed I wrote this week, and in which I took the view that Anglo, you could have the point of view that Anglo is another example of ESG wokeness, reducing the resilience of some of the diversified miners and leaving them vulnerable to hostile corporate activity. Why? Because they divested away from thermal coal. I mentioned Glencore and Teck Resources last year. That was a very key factor there. Recent years have seen Anglo divest its thermal coal assets, Thungela in South Africa, and it also sold its participation in the Cerrejón coal mine in Colombia to Glencore. It seems, BHP also sold its participation in Cerrejón, and it seems perhaps BHP might be taking a leaf out of Glencore's book by throwing an early shot across the bows of Anglo American and see what falls out for there. As you mentioned, Anglo American is perhaps almost certainly in play right now. And along the coal theme, it seems that maybe one could argue Anglo kept the wrong carbon-based product. It's got to be diamonds, which are, in some ways rapidly going out of fashion as people, want to recycle, they want synthetic. Traditional diamonds, people are saying, why do we need to still dig diamonds out of the ground?
You touch on a point that's near and dear to my heart. I do think there has been an element of of overreach and craziness on the ESG and the DEI. There's a madness that seems to have crept in the mining sector, and our biggest challenge as a mining industry is one of reputation. And the leaders of our industry have been extremely poor regarding promulgating without mining, the world as we know ceases to exist. And onto the coal side of things, still a third of global electricity production is from coal-fired plants. You cannot replace that in a heartbeat. And so there is such a lack of understanding in the average person, and maybe that's forgivable because people aren't educated about how their power actually where it comes from. And the world cannot go 100% renewable. We just simply can't, based on the technologies that we have today. And so Glencore, probably as Glencore does, I would argue Glencore is a thought leader in terms of how they're talking about the sector, not just coal, but also copper, is an understanding that the demand for coal is not going away. And we had peak coal demand in 2022. And I think getting rid of your assets at a time when you've got potential for peak pricing was perhaps not the most intelligent move that could be made. And so it'd be great to see mining companies, and when you go and watch their presentations, whether in person or at conferences, sometimes with some of the larger companies, you would have no idea what they do. They're so focused on ESG messaging rather than what their core business is. And our core business in the mining industry is a supply of natural resources that allows people to live the lives that we live today. And so we need to start being positive about what we do rather than apologists about what we do. So I think this is a signal, and maybe these companies and corporations need to start looking at the fact that the demand for raw materials is not going away. In fact, it's going to exacerbate. There has been a massive underinvestment in exploration dollars. The majors are relying on small juniors to do their exploration for them, and they simply can't. A junior needs to fund its business by drill bit news, and if you don't have immediate drill bit news, the investors get bored and move on. And so you need to have a very long gestation period and a firm commitment in terms of multi-year and potentially multi-decade of exploration expenditure to result in material new discoveries. And so I kind of think this plays into this thematic of what we're seeing right now with this underappreciation from the average person as to what mining actually contributes to their daily lives.
I've long maintained that Glencore are always the smartest people in the room, but I've never really heard them called thought leaders. That's perhaps a nice way of putting it, but I'll take it. It does seem that, coal divestitures have perhaps been the biggest corporate mistake ever from the diversifieds.
Absolutely. And this is, again, it's allowing very loud minority voices to dictate strategy rather than standing your ground. And my sister Kat, she's a cultural anthropologist, she's an academic, so not necessarily predisposed towards being favorable to this world of mining, but she's been somewhat corrupted by a family that's in the industry. And I think she said it best. She said that you can choose to be a vegan, but you cannot choose not to be associated with the products of mining. And so why are we apologizing for this? Why are we not pushing back? And this is the thing that I don't understand, is that you can have a educated, rational discussion about the fact that if we were to stop all coal production today, a third of thermal electricity production would cease to exist. And that would have a massive detrimental effect globally. And it would probably have a detrimental effect on some of the poorest countries. And so let's start being positive about what we do, and also educating not just the average pundit, but politicians and investors as to what our sector brings to the table. And it would be nice to see a little bit more of that.
Now, I don't believe we've heard the end of this. As you say, Anglo could be in play. Lots of other things could happen. But one of the other possible indirect casualties of this potential deal, if BHP does decide to come back with a better offer, could be the Vicuña district in Chile and Argentina, where various Lundin companies such as Filo, NGEx Resources and Lundin Mining dominate. But they really need a big boy like BHP to help develop. So it seems in some ways that an Anglo in the hand is worth more than a Vicuña in the puño.
How long did it take you to think up that one? That's awesome. I think there's another way to look. I think there's another way to look at it in that in the past decade, you as a company, as a developer or a company with development assets has not been rewarded because we have been in an environment where investors have not been looking for growth. I think we'll be seeing a structural change in the underlying, let's talk about copper, a structural change in the copper commodity price. We know that there has been serial underinvestment from exploration through to the build. We're seeing a massive shortfall in copper production. And I think what the Lundin Group of companies has is exceptional growth potential. And in a rising price environment, that's what investors love to see. And so I don't necessarily think it's a negative. I also think it's an opportunity for maybe another one of the larger diversifiers who perhaps has a bit more vision and understands if you know how to build an asset and execute on the build side, that's how you create enormous value, particularly if you're doing that in a rising copper price environment. So potentially if BHP is distracted with Anglo, I think it creates some opportunities with the Lundin Group of assets. So I don't necessarily view it as a negative.
Okay, copper's continued its rise. $4.50 a pound is back with us and looking like it's not going to stop anytime soon. Let's switch to gold, Nicole. Another big deal announced this week was Ross Beattie's Equinox Gold, which agreed to buy Orion Mine Finance's 40% interest in the Greenstone gold mine in Ontario in Canada, so it can consolidate 100% ownership there. Its price is $995 million in a cash and stock deal, potentially give Equinox market cap a bump up to $3 billion. Greenstone will be a standout asset, increase its gold production by 140,000 ounces a year. How does this deal sit with you, Nicole? Cheap, expensive, indifferent?
On the face of it seems expensive, I think. But if gold goes to $2,500, $3,000, and we seem to be moving in that direction, we'll probably look back on this and think it looked relatively cheap. So it really depends on your outlook on gold. I think there is this, I would say maybe somewhat of an unhealthy focus in our industry across mining in our view of political risk. And in mining, Canada is seen to have less risk than other countries, such in Latin America. And I would argue that's absolutely not the case. In Canada, your biggest risk is around permitting, but this is a permanent asset that is nearing production in a country where you're less likely to have your asset taken away from you directly. I would argue, though, that you're seeing death by 1,000 cuts in countries like Australia and Canada and the States, whereby governments are changing the goalposts in terms of taxes and royalties. And so maybe it's not direct nationalisation, but there's also indirect eating away at the financial viability or you as a company's exposure to the financial metrics of that underlying asset. But we'll wait and see. Obviously, Ross this is his focus. He's moved away from being a director of Pan American Silver. Equinox was always the Pan American Silver of the gold space. I think he's very, very intent on making this a success. He's a very smart man. He understands the business. He understands the power of buying assets that may seem expensive at the time. And this was Wheaton Rivers' model back in the day, basically overpay in a gold pricing environment and you look like a genius in a number of years. And so I think it probably is the right thing for them.
What's your view on Orion Mine Finance, not bailing out, but cashing out at this point? As you mentioned, that the mine's virtually, on the verge of coming into production. They would have got 140,000 ounces a year in a rising gold environment. It seems, if the opportunity was offered to get all their cash now, and they took it.
Yeah, I think that there's probably maybe a couple of other elements. The Orion Mine Finance, that they've been exposed to Horizonte, obviously, and that has not performed well. And if you've seen the recent news, which was the big nickel development play in Brazil, and so that company is lurching towards insolvency now. And so I would say there's been a number of deals that have performed less well, and perhaps strategically what they're doing is taking some money off the table on others to help compensate for that. So I think when you look at Orion's deal-making trajectory and when they monetize, I think you need to look at their business as a whole. And this has been obviously a great success story. And also, when a market is frothy and when the ducks are quacking and you can get a good price, sometimes being too greedy, that's not the smartest thing to do. So I think they probably exited at the right time in terms of where they are in their overall business.
Okay, now to finance the deal, Equinox will take a new $500 million 3-year term loan and do yet another equity financing, a $260 million bought deal. All of this will take its debt to about, I estimate, $1.2 billion. So maybe, Nicole, a name change to Leverage Gold would be appropriate.
But as we know, the leverage plays, the ones that outperform in a rising commodity price environment. So they're taking a very, very big bet on the gold price. And if gold retreats back to $1,700 an ounce, then obviously it'll be a very, very different picture. But they're clearly Equinox to do this. The board and management team are taking a very, very positive view on gold.
Okay, we have another deal in the gold space to talk about. That's G Mining Ventures, which is to acquire Reunion and Gold in an 875 million Canadian all-stock transaction to create an intermediate America's gold-focused producer. We've heard that before. We've heard it in the company we've just been talking about. The deal adds Oko West Gold Project in Guyana to G Mining's Tocantino gold mine development in Pará State, Brazil, which is due to commence commercial production later this year. Nicole, this seems to be an intelligent hookup, as G Mining has built some of the biggest gold mines in the Guyana Shield. So this really is its home turf, so to speak.
Yeah, I would say this is not a surprise at all. So for those that have followed some of the key decision makers that are involved in both companies. So Dave Fennell was a founder of Golden Star and president of Golden Star, and Louis Gignac, who is the chairman of G Mining, was the CEO of Cambior. And those two companies and those two individuals have worked together in Guyana before with their ownership of the Omai gold mine. And so, and Dave Fennell sits on G Mining's board, and Louis Gignac's son, Louis Pierre, runs the company, and G Mining is really the offshoot of the Gignac family who had G Mining Services, and that's a full service mining provider that has been involved in building some material new assets over the recent years, and really sells itself as being one of the few service providers that has managed to build mines not only on time and on budget, but sometimes under budget. And so the family is parlaying that success into G Mining Ventures, which is the public vehicle that owns Tocantinzinho in Brazil, and which have a strategic alliance with G Mining Services. So I do think that this was a deal that has probably was an easy one to predict. It makes a lot of sense. There's a lot of in-house expertise. I think that the Reunion has a fantastic discovery. Tocantinzinho is a whizzy big project. What you see is what you get, in my opinion. I spent a lot of time looking at it and a lot of my own money spending on due diligence on Tocantinzinho, because I spent 2 years trying to get it out of El Dorado before getting gazumped by G Mining back in 2019. So I'm very, very, very familiar with the asset. And so if G Mining executes well on Tocantinzinho, which they really have to, because they're selling themselves as the best in the business at doing so, and by all appearances seem to be doing a great job, they're building an asset at the absolutely perfect time. And if they come into production in a $2,000 plus gold price environment, in our market, very few companies can execute on the build side well. And so if they garner that reputation, and they have garnered that reputation, their share price has done very, very well, they can leverage that paper into the next deal. And this is a company that has made it very, very clear that they want to acquire development assets. And interestingly enough, many of their peers don't. And so most of the larger companies in the majors are shying away from development assets. But if you can be one of those few companies that executes, there's a huge amount of value to be created. So it's kind of a unique, I think it's going to be a unique NewCo, but I would expect there's some competition. I wouldn't be surprised. Other companies have to have been looking at Reunion Gold. It is a very, very meaningful new discovery. It is relatively easy in terms of its initial development, its open pit, its simple metallurgy. It is somewhat infrastructure challenged, and Guyana maybe isn't
Let me stop you there, Nicole, because I want to sort of come back with a deeper question about that. And just before that, my colleague Michael McRae is going to go a little bit deeper into this deal next week. He's got an interview with Louis Pierre Gignac, who is the president and CEO of G Mining Ventures. So hopefully we'll get the inside scoop about what's happening there. Now, before I rudely cut you off,
no,
go for it. Other companies being interested in that, Barrick Gold has expressed in recent years a great interest in that specific area, and also we need to bring in Reunion Gold's next door neighbor, literally just over the fence, and that's G2 Goldfields. Many thought that a merger between Reunion and G2 would be inevitable because between them they have a district that's potentially going to have at least 10 million ounces of potential resources. So potentially other offers will come in for Reunion Gold. Where do you see G2 Gold's playing in how this particular sector plays out?
Well, if I was you mining, I'd be looking at that as being a quick two-step after Reunion. Rarely do you see development companies get together. Companies that haven't got a finance project that's pre-development, so to speak. And so I'm not surprised that Reunion and G2 have not. I do think there's an interesting thematic that development companies, not just in the gold space, but also in the copper space, should be merging together. You could have in the copper space, for example, basically a development cartel where you'd lock up all future development and you'd create mass and size, which are very important in our sector with the proliferation of the ETFs, and you would arguably control a lot of material new supply. And again, future control of future supply is a very, very key critical thing that you don't get rewarded for right now. So I think it's very interesting what will happen with respect to G20. Anyone who acquires Reunion wants that asset and that company as well. And so I think as someone who's looking at the sector, it's an interesting name. But no, it'll be fascinating to see what happens with Reunion and G Mining Ventures. I wouldn't be unsurprised if there was a competitive bid that comes in, that this doesn't extract some more prominent interest.
Okay. Now, we're also just starting to get into first quarter results. So let's take a break and a breather from M&A activity, Nicole. Let's look at some of the week's results that have come in. The first contingent included Newmont, Agnico Eagle Mines, and a couple of others. What's your view of some of the results we've seen today? With this is going to the first quarter where gold's really consistently been over $2,000 per ounce for the whole quarter. So, Nicole, are you expecting to see the leading gold producers making money hand over fist?
They should start making hand over fist. I think the issue that a lot of the gold producers have faced and the gold companies have faced is that you've had this rising gold price environment, but you haven't had expanding margins because you've also been in a highly inflationary environment. And so when people are wondering, well, why have gold equities underperformed, that's probably part of the reason. I think the inflationary aspect of our sector has stabilized and arguably is starting to come down. And so we will be seeing, at least in the near term, true margin expansion. And I think that will start to generate interest in investors that aren't just resource investors, but those investors that are generalists as they see these companies start making material free cash flow in a strong gold price environment, in an inflationary environment that is stabilized, so margin expansion, increase in dividends and all those good things. I think the knock-on effect of that is you'll see improved share price and performance. And then when in this kind of environment, what always happens is these larger companies start looking at being aggressive on higher risk M&A. And so again, this has a lot of positive things I think that could potentially flow out of it for the developers, which have been very, very, very unloved over the last 5 to 6 years.
Well, looking at the Agnico and Newmont results, their all-in sustaining costs were 3% lower than in the December 2023 quarter. So earnings season seems to be getting off to a good start there. Nicole, let's close with a drilling result. Anything in particular caught your eye this week?
I'm taking a little bit of a different approach. It's a company that's near and dear to my heart because I think they've done an absolutely superb job of executing in a tough country. And that's Ozone, which is run by Paddy Downey, which is with its Bombora project in its first year of production. And yesterday, actually, they released some great drill results. And what made them attractive from my perspective is that they were infill and proximal to their existing pit outlines. And so very, very accretive and very high grade versus the current grade that's been mined at the deposit. And so I think having leverage to grade that can come through a mill pretty quickly, maybe it's not perceived to be as exciting as a grassroots discovery, but it's real. Real in the sense that it can positively impact the value of that company. So that was one that struck my eye.
Okay, excellent. I'm going for Collective Mining, which hit 632 meters at 1.1 grams per ton gold equivalent in a 200-meter step-out hole at its trap project in Caldas, Colombia. That was a very big hit.
No, it is a very big hit.
And a step-out, 200-meter step-out.
You win.
Well, no, this one's not content.
It is. No, it's always a competition. No, it's always a competition.
Okay, Nicole, this has been great. We've had really a good conversation. Lots of things going on. We'll have you back in another couple of weeks. Looking forward to that. Thank you very much for joining us again today.
Thank you very much for having me.
And this is Paul Harris digging deep for Kitco Mining. And if you like what you see, don't forget to subscribe.